You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
When there's a one-day sharp drop or a two-day sharp drop, it bounces back really quickly. And to me, that tells me that, the collective, whoever they are out there, and, it's the collective, they could be retail all the way to, extremely wealthy, sophisticated traders and investors. They're buying the sell-offs, and that's characteristic of a bull market.
Welcome back to Mining Stock Education. I'm your host, Bill Powers. Thank you for tuning in. Today's show is brought to you by Arcana Silver Corporation. And if you're an avid follower of this channel, perhaps you noticed that I was out at the mine site there in Ouray, Colorado recently. I visited it on August 5th and 6th and produced a 40-minute site tour video. If you haven't seen that, I would encourage you to click the link in the show notes below and check out that video. One of the things that came across to me is the exploration potential of this mine. As we've been featuring this company over the past few months this year, one of the feedback I have gotten from some listeners are, Bill, it looks good, but it seems kind of small. And so one of the things you'll see in this site tour video is that the feasibility study and the 30 million ounces of resources that you see on paper, that is a fraction of the mineralization that is there. That's just a portion of one of the numerous veins that the company has access to through the Revenue Virginia's tunnel and through their claim package out there. And so I encourage you to take a look at this site tour video. You'll see what I mean about the future resource potential comes across. I go in the mountain thousands of feet, and then a few scenes later, you'll see us standing 13,000 feet on top of the mountain. So it's beautiful scenery, and it'll also get you to see the potential of this company, which is why I invested in it. The website is arcana.com, and the ticker symbol is AUN in Toronto or AUNFF in New York. Well, we have returning guest on today's show, Dave Kranzler of Investment Research Dynamics. He's also the editor of the Mining Stock Journal and the co-producer of the Mining Stock Daily podcast. So, Dave, thanks for joining me again today.
Bill, thanks for having me on again. I'm looking forward to watching the video that you took of your mine tour in Ouray. That when I lived in New York, I had a ski condo in Telluride, like before Telluride became a fancy place. And in my opinion, being a native from Colorado and have been every part of the state, that particular area is probably the most beautiful part of Colorado.
I agree. It is breathtaking scenery. I brought my drone, got drone shots, and like I told you before we hit record here, Dave, I thought about you when I was there because you're a Colorado native.
I appreciate that. At one time, I did consider actually, when I was moving back here from New York, I considered actually living in Telluride because I had the condo there.
Well, let's jump into the precious metals. I hadn't focused as much on the price movement in silver in particular in the last week because I was focused on producing this video we just referenced. And then I remember looking at it, it was $29. I looked at it half a day later, and then it was $23. And I'm like, what in the world just happened here? And then you look at it again 12 hours later, and it's up a couple bucks. What do you make of these multi-dollar per day rises and declines that we've seen occurring in silver recently?
I don't know. I mean, if you look at the price today and you fall asleep for a week, you probably wake up and it'll either be the same price or higher, and who knows what happens in between. Actually, in all seriousness, well, silver it's a highly volatile market for, the market for silver, the trading market for silver is highly volatile because it's tiny relative to most other commodities. And certainly very tiny compared to gold. I used to know the numbers in terms of, the dollar value of above ground silver in the world versus above ground gold. And, it's to me, it's kind of meaningless knowledge, but the point is that silver is going to be more volatile than gold. And to the extent that COMEX futures kind of leads the trading, and the COMEX silver market is a lot smaller than the gold market. It just kind of adds to the volatility. So, in terms of what happened last week, my first instinct having, seen this type of price action intermittently for 20 years, the 20 years that I've been involved in the sector, and 3 years of intensively trading silver futures day in and day out, was that it was a manipulated price ambush by the banks, on the COMEX and in cooperation with London, because a lot of the indicators that I watch to try and sense when I think a price ambush might be coming. And I kind of smelled this one, but it took longer to develop than I expected to. I mean, I have been telling my subscribers that I was, for the last month, that I had been expecting some sort of correction. So, when I saw what happened last Tuesday, my instinct was, this is just a typical bank ambush where they go and they dump a bunch of futures on the COMEX to push the price down. That's, for, all the reasons that we know that the banks want to try and at least contain the upward movement in precious metals. And they go and dump paper and try to trigger the stop losses that are set by hedge funds, because the hedge funds are the biggest primary long side on the COMEX for gold and silver. And a lot of the hedge funds are geared to, chasing momentum higher and setting trailing stop losses. So, but then I was talking with a junior mining company CEO yesterday, and we were talking about that, and he made a comment that I had to take pretty seriously, which was, he goes, it felt like a Paul Tudor Jones classic, flush the market so that you can buy what buy what you're trying to buy in large quantity, in larger quantity. And I'm not, he wasn't saying that it was necessarily Paul Tudor Jones per se, but then I was thinking about it, and it was like, the nature of that market action is, like you described it, silver, you turn on your screens and silver's down over $3, and then the next day you turn on your screens and silver's up, it's reclaimed 75% of that price hit. And historically, when we've seen just a shock and awe sell-off, shock and awe, half-day sell-off in the metals like we saw last Tuesday, and the banks are behind it, there's usually follow-through on that. You get like, a couple step function or more than one step function down day in a row, and the technical damage lasts for, a couple weeks to a couple months. In other words, you don't get a V bounce back like we've seen, at least so far. That's not to say that there's not another down leg coming. I mean, no one knows. No one can answer that question. And it's certainly within the realm of possibility. But if we don't get a down leg like we saw, then that was what we saw last Tuesday, was an operation by someone. Could have been the banks trying to cover shorts before the metals go higher, because we know the Fed's going to have to print a lot more money. And the federal government's already announced, a massive boatload of new Treasury issuance between now and the end of the year. And it's probably going to increase even more by the time we get to the fourth quarter than what they've announced so far. So it could have been the banks, looking to do a quick hit operation to because they've been trying to, if you watch the Commitment of Traders report, the banks in general have been trying to reduce their net short exposure to paper, gold, and silver. Or it could have been someone like a Paul Tudor Jones who went in there and said, okay, this market is technically overextended. I know there's a lot of stop losses set on the long side. I'm going to go flush the market, and I'll be the buyer when I'm done flushing it. And, they know that it's going to cause a V bounce because all of a sudden there's big bids in the market again. And one of the things that, for me at least, that, that version of what may have happened makes a little bit of sense, is that if last Tuesday was a bank-led operation, we would have seen the open interest go down the next day in gold. And in fact, again, off the top of my head, I don't remember the exact numbers, but I think the gold open interest, I didn't really pay attention to silver, but the COMEX gold open interest went up by over 3,000 contracts. So, it looks to me like there probably was a lot of short covering by some entities in there, but on a net basis, there were net buyers on Tuesday. So, it's, again, you never know for sure what exactly happened, but in my mind, it was either a bank raid that we've seen, typical of what we've seen over the last 20 years, or at least I've seen, or it could have been a motivated buyer who, and if you read, like, I don't know if you ever read, I think it's called like Memoirs of a Stock Operator or something. It's Jesse Livermore who wrote the book, and he describes how stock operators back in the 20s, and it's that this type of behavior goes on, it's gone on since then, and it goes on every day, how a stock operator will plunge the market to put on a long position at lower prices. So, the more I think about it, that possibility, I think, is just as strong as a bank raid.
So Dave, based on your 2 decades of experience observing the silver market, should investors in this silver bull market just understand that it's par for the course for these 15% beatdowns that immediately pop back up 8% once they hit the bottom?
I don't know that's necessarily par for the course. And certainly, for really the last 12 months, the beatdowns have been sharp and short-lived. And, you can go look at, say, just look at a 60-minute chart over the last year, and you can see when there's a one-day sharp drop or a 2-day sharp drop, it bounces back really quickly. And to me, that tells me that, the collective, whoever they are out there, and, it's the collective, they could be retail all the way to, extremely wealthy, sophisticated traders and investors, they're buying the sell-offs. And that's characteristic of a bull market. So I think just in general, I think if you're going to traffic or play or invest in the precious metal sector, you got to brace yourself for a lot of volatility. And the volatility is exacerbated by the official intervention that gets injected into the market every now and then. I mean, unlike the stock market, where the Fed and the Treasury Department are in supporting stocks, and putting a floor in on sell-offs, those two entities would prefer to see the precious metals go a lot lower. So, you're swimming upstream to begin with, but it just tells you how powerful this bull market is right now in the precious metals.
When you analyze the current valuation of the miners, what do you think, what gold or silver price do you think they're factoring in? I've heard people say like $1,750 gold. What's your analysis here?
That's something that's really highly subjective. I don't know how someone would say with conviction, oh yeah, the level on the GDX right now is pricing in $1,750 gold. I mean, how on earth do you figure that out? I don't know. What I would say is that, generally, and I think it works. I think price discovery works the best in the mining stocks because the Fed's basically removed price discovery from the stock market, but I think it still is in effect with the mining stocks, and because the Fed's removed the risk from general stocks like Amazon and Tesla, right? But there's not a Fed put for mining stocks. BlackRock's not out there buying the GLD or the GDX ETF. That it's buying every other frickin' ETF under the sun that's full of crap. But what I would say is that the run-up that we saw in the sector from mid-March until last week, or wherever the market kind of topped out temporarily, I would say that because the mining stocks outperformed on a percentage basis, they outperformed the metals by several multiples, right? So I would say that the mining stocks were discounting a move to 2,000 on gold and a move over 20 on silver. I mean, I don't think anyone on this last kind of run up, I don't think anyone saw high 20s in silver coming. I mean, I had been saying I thought gold would hit 2,000 before Labor Day weekend, if not sooner, or by Labor Day weekend, if not sooner. But I didn't really. I said maybe silver gets to the low to mid 20s because silver had been so sluggish. And for as hard as it was for gold to get over 1900, I mean, it seemed like it took forever for silver to push through 19 and 20. So I would say that the move in the mining stocks discounted most of the move that we saw in gold and silver. And if you noticed, the mining stocks were weak, probably 4 or 5 days before the price hit on gold and silver. So the mining stocks, I think, already started discounting some type of price correction before the metals, and that's typically what happens is the mining stocks will start to lag, and even have days where the mining stocks might decline on days when the metals are still going higher. So I mean, I guess what I would probably feel comfortable saying is that on the assumption that the sell-off in gold and silver is largely over, meaning we saw the bottoms already last week, I would say the mining stocks probably, maybe grind sideways for a bit. And then once the metals, give us a clear indication that they're going to start moving higher again, I think we'll start to see the mining stocks once again discount, higher prices for gold and silver by the end of the year. And again, I don't want to put any price forecasts on any of that, just because it's volatile and there's heavy intervention most of the time. So I mean, what I would feel comfortable saying is that between now and the end of the year, by the end of the year, I think the entire sector will be higher, but what price path it takes, I have no idea. And no one does.
When you saw that powerful move that we saw these last 2.5 weeks where silver nearly, got to $30, and then you also saw that the miners were telegraphing there'd probably be a pullback in the precious metals, did you trim some of your winners at that point to then reallocate that cash once you thought it bottomed out at 25 or wherever the price would have bottomed out at?
Well, that's a good question. And I get that a lot from my subscribers. And I mean, it's impossible to time a market perfectly. No one's going to time the top perfectly or the bottom perfectly unless they get lucky. And anyone who says they do it consistently is lying or is delusional and maybe does it in a paper account, not a real account, like Dennis Gartman, who, his newsletters were based on paper trades. So you notice he would say, we're buying 1 unit of this because it was all paper portfolio. But I actually started, and again, I get this question a lot from my subscribers because I had several picks that, as did everyone, that tripled and quadrupled between March and mid to late July. And, they're like, what, should I take profits? Blah, blah, and I was like, look, if you get a triple or quadruple in any stock, I don't care what it is, you got to take some money off the table. At the very least, raise some funds because it's not going to go up forever. And at some point, there's going to be a price correction and you want to have cash. So if you still like the story and you think it'll even go higher, you want to be able to add to your position at a lower level. So yeah, I mean, I started raising a lot of cash 4 weeks ago. And not like I sold half my portfolio, but I probably took my cash level up from, say, 5% to 15%. And then over the last couple of weeks, I've been, in and out of hedges. So, and the hedge worked great on Tuesday, but before Tuesday and after Tuesday, it's been kind of a zero-sum game. So that's another reason why it kind of feels to me like, we're going to probably see, a little more downside volatility, but I think we saw the lows last week. And I think at some point we'll move higher because, again, at some point the fundamentals are going to dictate that the Fed's going to have to start printing a lot more money again.
Dave, when you get emails from your subscribers, does it primarily have to do with, is this sell-off over or should I sell? Have we reached a top? Are those the primary questions you get?
I get a whole plethora of questions. It's like, what, should I, do you still like this stock? It's sold out, it's pulled back 2%. I'm thinking to myself, 2%, that's nothing.
These things go down 20% in a day for no reason.
Yeah. So I answered some emails this morning, it's like, Fortuna missed by a penny. And do you still feel the same way about it? It's down. Should I buy shares on this? And I pull up Fortuna. It's down like 12 cents. I thought it was going to be down 30 or 40 cents. I was hoping for that because I want to add to my position. And my answer was, look, first of all, Fortuna, their numbers were affected heavily because of the virus crisis. I mean, they had their primary operating mine was shut down for half of the second quarter. So yeah, of course their numbers aren't going to look good. And the market knows that, and it doesn't surprise me that they miss because you don't know exactly to what extent your overhead allocation is going to affect your earnings when your volume's down, right? So yeah, your costs go up when the volume that you're processing goes down. And I said, look, Fortuna is not about what happened in the second quarter. First of all, it's going to report great numbers for the third quarter just because of the massive move we've had in gold and silver. But it's about the opening of the Lindero mine down in Argentina, and that thing's going to be a major league cash cow. And every dollar the price of gold goes up adds $1 to the gold that is sold, that Fortuna keeps from the gold that's sold, right? Because right now the price of gold is so far above their all-in sustaining costs that every price rise in the price of gold that they can realize by selling gold, it goes right to the bottom line. So that I really was hoping Fortuna would get hit hard, and it didn't get hit hard today because I think the market understands that.
And that's the reason why you'd want some cash on hand, like you were talking about earlier.
Yeah, and it's again when what I preface with when I get this question, should I take profits or not? And it's like, look, everyone has their own risk return preferences. If you got a triple or a quadruple, I don't care what your risk return preferences are, sell at least a third of the position, because then you've got no money invested in the name and you can just ride it, and you're not worried about downside volatility. So and that's the thing. I think people kind of get brainwashed by seeing these insanely overvalued tech stocks just go up every day. But quite frankly, the mining stocks, a lot of the junior mining stocks have outperformed every stock on the New York Stock Exchange since mid-March.
And Dave, Fortuna was a pick you shared on this show after you shared it, of course, with your subscribers. I think you shared it about 4 months ago or so. Any other picks as we kind of wrap this up that you'd be willing to share with my listeners?
Sure. And, again, I want to preface this by saying I don't receive sponsorship money or promotional money from any mining stock companies. I don't read any, other research. I just I do my own research. I make sure I talk to the companies I invest in or I recommend in my mining stock journal. And I keep in touch with the companies. And so, my analysis is all my own and my opinions are all my own. And, I also emphasize that in general, I like to look for junior mining stock ideas that are kind of the junior venture capital companies that are not well followed, right? I mean, once like someone like Rick Rule starts promoting a company, I mean, everybody knows about it, right? And I want to get in before guys like that are promoting companies. So I like to look for companies that are their market cap is under 20 million, and they tend to be risky, high risk, high reward companies. And I always caution that, if you're going to play this stock, just be aware that you might lose 50% to all your money in it. And, in return for that, you have the potential for a 5 or 10 bagger on a stock. So, and not all my picks in the Mining Stock Journal are those types of stocks. I actually started looking at what I consider to be undervalued, near producing or producing companies. So an undervalued near producing company that is extremely high grade silver is Alexco Resources, and I'm sure almost everyone listening to this knows that company, but I took a pretty in-depth look at it a couple weeks ago, And I actually started buying it at $2, and I informed my subscribers that I was buying it at $2, $2.10, and I said, look, I think it's a good idea, but I haven't done thorough work on it. So, but I will, in the next issue or two, I'll put my analysis in it, and I put my analysis in it last week after chatting with the company about it. And I mean, just where the company stands right now in terms of its existing resource and what its production forecasts are going to be, it's probably slightly undervalued, and it will outperform its peers as the price of silver goes higher. It'll probably underperform its peers as the price of silver goes lower. But where I think there's some junior-like upside potential returns is in the potential, like Arcana, like the potential expansion of the resource. I mean, they've only explored something like 10% of their property, and so the silver itself that's in the resource is extremely high grade. So, when you have like a really high grade resource versus a medium grade resource, that resource becomes even that much more valuable when the price of silver goes higher. So Alesco is one that I really like. I don't know if I've mentioned Ely Gold royalties on this show.
We've talked about that one a couple of times. Yep.
Yeah, and so and that's one I started buying a while ago at 30 cents, and I think that's about where I had put it in my mining stock journal. But even over $1, like I think it's like around $1.20 now. And I think it ran up to as high as maybe $1.50 and then had a big sell off. But I think Ely is in the early stages of potentially being a several $100 million market cap royalty company if it doesn't get acquired before then. So in fact, I should have known this, but I didn't. Or I should have remembered this, U.S. Gold. I'm sure you.
They've been in the news, haven't they?
Right. So, and that's another stock that I really like here, and I think that the
market liked it too. It went up 16% on the news.
Yeah. Oh no, it's that acquisition they did is transformative, but I'll get to that in a second. But as it turns out, the company that they merged with has the Chalice Gold project in Idaho. And it's got an existing 300,000 ounce 43101 resource that's out of date. And I was talking with the guy who founded the company, and basically his company owned the mine, Northern Panther. I was talking with him on the phone yesterday. A very, very Bob Schaffer. He's very, very respected mining engineer. And he had mentioned that, because I asked him, well, how did you come across the property? And he said, well, I knew about the mine, and I knew about the property. And when I went to, look into it, I was looking for a project to work on, that I could have I wanted to develop a mine. He goes, it turned out Ely Gold Royalties had already staked the claims on the resource area. And so he optioned it from Ely Gold, and Ely Gold, I think he said they have a 2.5% SAR on it now. And this is a mine that, or a resource that is potentially, 3 times larger than the existing outdated 43101. And it sounds like, again, I don't know what the time frame would be, but it sounds like, once they decide to put in a mine there, it won't take a long time to get it from where it is to into production, especially since it's not on any federal land, and so they won't have to deal with federal permitting. And obviously, Idaho is a very friendly mining state, so that's yet another royalty that is probably, I don't know, 2 to 3 years away from starting to pay for Ely. So over that, I think they got 2 current pay royalties, and maybe 3 now actually. And it's another situation where over the next 2 or 3 years they're going to have a lot more royalties that start to kick in, and the upside leverage to gold is just enormous with these royalty companies, as you know. So getting to U.S. gold, I haven't written up anything yet. It's going to be in my next mining stock journal. And I want to save the fine details for my subscribers, but I'll just say that, and I wouldn't recommend chasing the stock here because I think it probably will settle in at a lower price. I think it ran up in the excitement over the transaction. But I mean, U.S. Gold now has 4 properties, any one of which could be a company maker, meaning any one of which could take this from being, let's say pro forma the deal they just did. It's around $60 million market cap company right now, roughly. Any one of these projects could transform this company into a stock that has a market cap of a couple $100 million. So, I'll maybe next time I come on the show, maybe I'll share my analysis on that. But I want to make sure my subscribers see it first.
Dave, thank you for sharing those tidbits. You've gotten a lot of leads for companies to research with from Dave today. If you want to get Dave's service or read his weekly blog, please go to investmentresearchdynamics.com. I'll put a link in the show notes below. As always, Dave, thanks for coming on the show and sharing your insights.
Hey, my pleasure, Bill. Thanks for having me on. It was great chatting with you.